Hello investors and welcome back to Just Randy Stocks. During this video I want to talk about Allbirds, which is trading under ticker symbol BIRD. And is this a buy at the price between $12 and $14? It's going to go public on November 3rd, but sometimes these initial public offerings, they can be a chance to get in early for a company that's going to do well, but there's definitely been some volatility with some of these plays that have went public. Is the timing right to buy this one ahead of time? So Allbirds is an apparel and fashion company that specializes in manufacturing eco-friendly wool shoes. And Allbirds is on a mission to prove that comfort, design, and sustainability don't have to be mutually exclusive. So there's two co-founders to the company. The first one's Tim Brown, professional soccer player, was in the World Cup in 2010. So Tim Brown is from New Zealand and he meets his other co-founder, Joey Zwillinger, who's a biotech engineer with a focus on renewable materials. So I just want to set up this next clip because Joey's going to talk about his previous role and some of the challenges that he had of getting people to think differently. He's going to explain how he met Tim and a special meal that these guys had. You just listen, you'll understand once you hear it.
Push amazingly renewable and sustainable materials into the world, and we use biotechnology and engineered microalgae to metabolize sugar products and make high performance products like chemicals, which I ran. And I had this just recurring nightmare of a meeting every time I'd get advanced discussions in business development with customers or potential customers. It would devolve into this sourcing conversation of can you just do what we do now and just do it cheaper? And it was always like every single time it was like, you guys are missing the big picture here. Like the consumers do want this, and this is a better product. You just need to connect it in a way. And sometimes it took going to senior leadership. But in a time when oil prices are low, substitute products are cheap, fast, and easy, people aren't paying attention as much, the brands kind of get soft and lazy. I think this was a really interesting time for me to kind of connect with Tim. So his wife suggested we talked. I convinced him to fly out from London to my house just north of San Francisco, Mill Valley. And I cooked him a lamb stew that night when he arrived, which he thought was funny. So that was a good start to the partnership for some wool shoes. And then we spent like 3 days really walking around the hills just north of San Francisco talking about why the world needed a new shoe company.
So the fashion and apparel industry is definitely going to come with its critics, and one of those is PETA, or the People for Ethical Treatment of Animals, because the company does use wool and they also use crab. I want to go through what PETA had to say. So with the renewable and sustainable topic, you have to understand that part of the risk is how animals are treated and the use of animals in this product. It's a huge topic and people get very emotional about this topic, and rightfully so if you see some of these very disturbing videos, but I don't believe they relate to this company. But you can see some of these branding and PR comments out there. It's just, I don't know how it's fueled, but PETA, animals are not ours. You know, it's got this branding. It says Allbirds is all wrong. Urge it to ditch wool now. So what they're saying is that they're supposed to end this by 2025. They updated April 14th of 2021, but it goes through here and it says all cruel wool, not green, and makes sheeps scream. And they've got a very disturbing video in here that's not even related to them. It's just, it's possible in the industry, and this org has found this happening before. So I'm not going to go through all the details, but I do want you to know that I went through here, did my due diligence. Let me know if you find anything in the comments below. But Allbirds supplier for their wool, ZQ Merino, claim transparency, but have been unwilling to share any information about the treatment of sheep to support its claims that sheep live the good life. But I do want you to know that I checked out to see how they're audited, and you know that there is a practice to audit them. And it talks down here below about how their metrics isn't fair for carbon footprint and how it doesn't account for everything. And it also talks about the crabs that are used. So third-party auditing, here you can see that there is a third-party auditor. I pulled them up, and it's a legit website. The frequency, I'm not sure. Couldn't find the audit report, but the sourcing of Canadian snow crabs is also used in the products, and it's just good to be aware as an investor if you're considering this play that you could see these things pop up. And they do use discarded snow crab shells in the seafood industry. So a third of the snow crabs are discarded. One third of the weight will be discarded after processors remove legs and shoulders. Renewable, sustainable, good for the climate. Yeah, I believe it checks all of those blocks legitimately. And I believe they're in the right direction where we're going to see more of this in the apparel and fashion industry, of these types of practices and this R&D type of research and development being done to create new materials that are more sustainable and have less of an impact on the environment. So this company's been branded as the world's most comfortable shoe. They have a high net promoter score of 86, and most people would go back and buy their shoe again. So on page 85 of the S1, you can see the recent financial performance, and down here we've got digital and physical retail. So digital making up a large portion of their sales, with physical locations which have grown from 3 physical locations in 2018 to a little over 20, and they plan to expand that physical footprint. Even though you could see online digital sales are representing a large portion, so while they're expanding their physical footprint, I would want to know, why wouldn't you consider just doubling down on your online digital space? So I would just, in the first earnings call, you might want to listen for more investments on digital and not brick and mortar. So new companies that are going public are aggressively growing and reinvesting back into the business, but this also shows net losses that are frowned upon by analysts traditionally. So you could expect this valuation to stay low in the short term. At page 26 of the S1, it goes through some of the risk, and they've incurred a net loss of 14.5 million and 25.9 million in 2019 and 2020 respectively. They've accumulated a deficit of 113 million as of June 30th of 2021, and we expect to continue incurring significant losses into the future. So this could be a real turnoff to analysts and people looking to add this as a position. They're expanding their product and style mix. They're doing investments to new material innovations and technology. These can take anywhere from 2 to 3 years in some cases to develop those. So R&D spend could be up quite a bit. They're focusing on sustainable and environmentally friendly practices in their supply chain, which can be more expensive than alternate traditional methods. And you heard that in his explanation when he was talking about being in biotech. So it's not the cheapest method. And then here, advertising, marketing initiatives, engaging with new customers, and then extending our retail store fleet, which I don't think is necessary just because they're seeing such online success. I don't know that everybody needs that brick and mortar interaction, but they are dedicated to growing the stores, which I think is a bad move. Invest in the overall health and wellness of their employees, address competition. They're going to have to do that. Recruit and retain talent. They're going to have to grow their team. They're relatively small now, and incur significant legal, accounting, legal, and other expenses. So when I'm thinking about purchasing a company, I try and ask myself, how many things am I going to have to watch in this company to make sure that I can keep up with their thesis? And number one, I don't like that they're going towards the brick and mortar and that there's not more of an emphasis on the online part of the business that's working so well. I feel like they're strategically really trying to get physical locations where it's not going to be as important in the future. I want them focused on inventory and missed sales. When they don't have a sale, I really want to be able to capture that so I can count that as a missed opportunity. So their forecast is going to be very challenging. Are they going to be able to get the right stuff in the right place at the right time? With everything going on right now, take a look at the leadership team and their backgrounds and ask yourself, are these two people that have a lot of background and experience in retail and making sure that we get the right stuff to the right people in the right place? And you can hire the people to do that, and maybe they don't have to have all of the skill sets, but net loss and not understanding when profitability will actually be accomplished, this might be a wait and watch. Love to hear what you have to think. Please leave a comment in the comments below. Give the video a big thumbs up if you learned anything at all, and I'll see you in the next video.